Richard, the British Prime Minister Harold Wilson once disparaged Swiss bankers as the gnomes of Zurich. These days, you're as likely to find Julius Baer's gnomes in Shanghai as you are to find them in Switzerland. What are they doing over there?
What they're doing, according to a TV interview given earlier today by the CEO Boris Koladi, is thinking of furthering their expansion in China. They've got a rep office in Shanghai. They're talking of a joint venture, maybe a partnership, or even an acquisition of some sort. And this rather goes counterintuitively when you think of all the emerging
the doom
market
and gloom
noise.
about
Exactly.
China. Yes, it's going down the pan. So presumably the rich people in China are relatively unaffected by this.
Well, the rich are getting richer. So there's all the doom and gloom. There's the renminbi devaluation. There's the emerging market sell-off, which we've seen most obviously here hitting people like Aberdeen, Asset Management and Ashmore. But the Swiss banks are still on a bit of a drive. It's not that they're oblivious to it, they're still on a drive. And what Boris Koladi's house has found, doing some in-house research, is that there will be about 8.3 trillion of millionaire or high net worth individual wealth in China, and that by 2020, and that's up from about 4.2 or 4.3 now. So there's serious growth in rich Chinese client base.
Isn't this a bit of a defensive move, though? Because when you look at what's happening in Europe, Julius Baer's domestic operation is under siege, if you like, from regulators around the world, particularly in America, who are desperate to stop American citizens stashing their wealth away in Switzerland.
Well, there's always the prospect of a fine. So there are US settlements happening in the background as a sort of basso continuo for all Swiss banks, and one after another they're settling them. But I think this is a real bet on future growth, and that means not chasing mature markets. Even the biggest financial market, savings market in the world, the US, is not being ignored by this expansion. But I think you'll find that Asia is where its future is coming from, and particularly within Asia, they've bolted down North and Southeast Asia. They're looking more at India as well, where again there's an emerging cohort of millionaires.
Now, the last time I went to Zurich, my abiding recollection of the place was that it was eye-wateringly expensive. Is that also true of shares in Zurich-based private banks?
You'd be right there. On the Bloomberg terminal just now, it showed me that it's trading on more than 4 times the bank's tangible net book value. And that really is probably, well, it's almost 3 times the level of a Credit Suisse. And that seems incredibly high. But then you end up paying for quality.
What about in relation to other pure play private banks like the sort of Vontables,
well,
and Pictets of the world?
They're on more like 2.2, 2.3 times. So again, you pay up for a pure wealth management play. You get diluted if you get an investment bank come wealth manager like UBS or Credit Suisse. The rating is depressed. So some will say, well, there's a good argument for splitting off the wealth management business altogether.
So you get what you pay for. Richard, thank you very much.